Welcome to Investing by the Books, a podcast by Redeye. I'm your host, Eddie Palmgren, and next to me here in the temporary studio in Omaha is my friend Niklas Sävås. How are you?
I mean, it feels fantastic to do this special episode from Omaha, and I'm really happy to be here.
Yeah, the sun is shining finally, the birds are chirping, and the street is busy. So we're excited to share our conversations from Omaha. So what have we been doing in Omaha so far?
So we arrived Wednesday evening and got to bed as soon as possible, and then
it was a long flight from Sweden.
Yeah, really long, and we were all really tired. But we're refreshed the day after. We went up, and it was like 30 degrees Celsius, and really nice.
What did we have in mind? We had a goal.
Yeah, I mean, first of all, we just went for some breakfast, and we couldn't find any. I think we went around in circles for an hour, but then finally we just decided to buy something in the local store and get back to the townhouse. But after that, we decided to actually take a walk to Buffett's office and his house. And we had some problems finding the office.
Yeah, we were looking for this Kiewit Plaza, but where is Kiewit Plaza?
We couldn't find it. I mean, we saw a large tower, a black tower called Blackstone Plaza. And after some Googling, we realized that Kiewit Plaza is not longer named Kiewit Plaza.
And what was your impression standing there, seeing the building?
I mean, it felt a bit meditative. So I just looked up to the windows there and could just see Buffett sitting there reading. And I just thought about how many hours he has spent there reading and thinking and doing all the great decisions that's now become Berkshire.
I don't think I ever heard anyone say looking up at a skyscraper feels meditative. But to me it was very unreal just to see it, and we were speculating which light bulb was his shining up there. We also saw the McDonald's on the way where he probably stops every morning to buy his breakfast, right?
Yeah, exactly. So when we went to the house, I think one of the guys in the team just said, "There it is," and I think both me and you were like, "What do you mean?" And then we looked up, and then we saw the house.
Yeah, the house where he has been living for many decades.
Yeah, and it was a really nice house. I think. I think you hear that Buffett is modest and so on, but I think he made a great decision to buy that house early, because I think he realized I don't want to buy another home. I mean, it's a mess to buy another home. So
waste of time.
Yeah, so he bought a big one from the start.
Yeah, that's smart capital allocation. Probably.
And the area was really nice as well.
Yeah, really nice. And then we walked back, and I was thinking at least if he ever walked all the way back to the city. But.
Yeah, we joked about has Buffett ever walked to the office, and it's like, to be fair, it's like a 15-minute walk or something like that. It's not that long, but yeah, we speculated about maybe, I think, because our guess is that he takes the car, go past McDonald's. I think there is a film about Buffett's life, and then he shows how he got to the office. So we just think that as he is a guy who has strong habits, I think he does that every time. And I can probably not even guess, but I'm quite sure that he hasn't walked from the center of Omaha at least to his house and back, because that was like 25,000 steps, and we were all exhausted when we got back, and with the heat and so on, we were quite. We've had a winter in Sweden. We're all white as ghosts, and all of us got burned, and especially our studio guy Gustav, who's doing the recording and editing. I mean, he was red as a shrimp.
That's harsh. But then came the evening.
Yeah, we had our meetup. So Eddie, you had done a great job arranging that.
Yeah, it was really nice. We went to Upstream Brewing Company, a brewing company here in Omaha. Really nice location, and we met a couple of you listeners, and it was really nice to have some discussions, meet in person. What did you?
Yeah, we had some. It was just nice to, of course, as always, speak with like-minded people, and I think that was really nice, and we discussed a few different investment cases and so on. So it was nice. I hope we will keep in touch with them and to be able to speak about ideas in the future as well. And I mean, we're happy if our listeners get in touch with us, and I mean, we're happy to discuss investment cases and also investment philosophy and so on.
Yeah, we can do Zoom calls, and we can also, of course, if you come by Stockholm or if we're traveling, just let us know. Our Twitter handle is IB_Rada, and you can contact us there.
And after some sleep, we went to the MOI Global event.
Best Ideas 2022 was the name of the event, and there were 12 people pitching a stock case each. So it was a very interesting setup. And you have a relation with MOI Global, right?
Yes, I worked with John before, and I'm a member of MOI Global since a couple of years ago. And I was an intern, actually. I did some work for him. So, and I think John is a great guy. I mean, John Mihailovic is the founder and operator of MOI Global. And he has managed to get together a great group of investors.
And what did you think about the event?
I think it was a really interesting event. I mean, they have these events like couple of times every year. Some are virtual, some are physical, and I think the presenters are sharp. They present their ideas in a good way, and you notice, of course, the differences. Some have done this many times, and some maybe not that many times, and I think that shows as well. I think Tom Russo was one example presenting, and it's easy to follow his presentation. I think it was a great presentation. What's your view?
Yeah, I really liked that one as well. And to me, what stood out was how complex it is. Some of the cases, which is very interesting because it's different from something that I would look to. But simplicity wins for me. So those were the cases that I felt most attracted to. I could understand it from the beginning and follow through, and there were not too many questions. And you?
Yeah, I agree. I think there were like very different cases, and I mean, none were really in my sweet spot. So it's hard to come up with great questions then and so on. But I felt that there were like one or two cases which are which I may look in deeper to.
And why? Why are those?
I mean, it's just that you have. I mean, I think I have my way of thinking about investments, and I just think that. Most of the companies, I just felt that I need to do too much work in order to gain conviction, and the others, like for example, like the brands that Christian Billinger talked about, Campari, and Tom Russo talked about Heineken, and those are both brands that you can relate to, and you have some knowledge about them as a consumer, and they have a long history of stability, so I think it's easier to judge their future economics than the others.
Yeah, then the issue is valuation.
Yeah, exactly. So that I may pass because of that, but it may be interesting to have on a watch list, and then if you get a chance in the future to when the price drops too much, then you may be able to swing the bat.
Indeed, and it was a really nice event. We had some good conversations after the event as well with some of the attendees and some of the speakers. And we also had the chance to do a little interview with one of our previous guests who presented a case here, Shree Viswanathan. Yeah, it was really nice to meet him in person, finally. And we spoke a bit about his experiences from coming to these meetings. Here comes our conversation with Shree Viswanathan. Investing by the Books has the pleasure to be in Omaha, Nebraska. And we have just been listening to Shree Viswanathan, who has been speaking and presenting a case here at MOI Global's Best Ideas 2022. It's a pleasure to have you with us. Hi.
Absolutely a pleasure to be here. Thanks for having me.
It's really nice to meet in person. We met digitally when we did the podcast a month ago, but it's different.
It certainly is. I mean, the first time I'm meeting many of my old friends physically, and first time I'm meeting you and Nicholas. This is fantastic.
And how did you come across Buffett and Munger and Berkshire Hathaway from the beginning?
This goes back to 1995 when I used to work in Des Moines, Iowa for an insurance company, and my colleagues who were in the investment team got excited about this big acquisition that Buffett had announced that happened to be the second big tranche of Geico. And that was my big introduction to Buffett and investing.
And when was the first time you visited the annual shareholder meetings?
I think my first time was either 2013 or 14, I don't remember. But unfortunately, not as many as I should have.
And what is it that makes you come back here year after year?
That's the key question that we all discuss every time we get ready to come here. I think not just the opportunity to learn from the two masters, but many other potential meetings with other investors, running into serendipity, setting up for serendipity. Those are the reasons why I keep coming here, and I love it.
Yeah, and it's really a good networking place as well. It's nice to meet so many people. And what would you say are the most important concepts or principles that you keep finding yourself identifying and referring back to from Buffett and Munger and Berkshire Hathaway?
Market is, there is a reason why the market is what it is. There are a variety of different investing styles. As we heard today from the MOI presentations, a range of different types of investments. But across the board, the one common theme seems to be long-term approach. And that keeps resonating, and that's part of my investing style as well.
And is there something you do differently from them in your investing style?
I don't want to be in the same sentence as those two. I don't qualify to be in that same sentence. But I try to emulate many things that they have taught. Concentration. I own only 10 stocks in the portfolio. I take a fairly global approach, which is different from what Buffett has done, at least, and Buffett and Munger. Although they are in Israel, China, and Japan, and they've been in South Korea in the past. But about 50% of my portfolio is outside the US. And other than that, concentration is a big factor, long-term is a big factor, valuation is another big factor. So,
and it's now Friday, and tomorrow is the real meeting. What are your expectations?
More lessons from the two masters.
Are you going to ask some question, or?
Absolutely not.
Why is that?
I'll let others ask the questions, and I'm there to just learn. So I'll be taking notes, looking for interesting questions.
And what would you say to some of our listeners who have not been here and are maybe, I mean, everyone is somewhere on their journey in investing, but are quite new? What would you say to them?
Yeah, if you do get a chance, please do show up here. We don't know how many more times these two masters are going to be able to do this together. But even after they leave, this would still be a fantastic opportunity to come and learn from other investors from around the world, great ideas, investing approach, philosophy. We met another gentleman from Sweden yesterday who had a very different approach to investing. So this is a place where you can truly meet a variety of different types of investors, and there's always something to learn. You may not agree with everything and everybody, but that's the beauty of this.
Thank you so much for taking the time, Shree.
You bet. Thanks a lot for having me here. Appreciate that.
Yeah, it's always as interesting to hear what Shree has to say, and this time was no different. And just after Shree, we met with Christian Billinger and had a chat with him. And here comes our conversation with Christian.
Now we're standing here with Christian Billinger in Omaha. Christian is one of the members of Investing by the Books, and we had him in the podcast before.
Hi, good to be here, Niklas.
So, how many times have you been in Omaha for the AGM?
So this is only my second time now, but of course, so I was planning to come here, of course, in 20 and 21, but we haven't. Obviously, there hasn't been a meeting, so second time. But yeah, it's great to be back, and I recognize how many more people I know this time, and so it's really fun.
And what do you feel it gives you as a manager?
I find it's less about the knowledge, the sort of technical knowledge. It's more about it's an inspiration, right? It's an inspirational sort of weekend. You know, it's a bit of a refresher on a number of concepts, I guess, that Buffett has taught us. You know, long-term thinking and looking for great businesses, and so it's great to meet like-minded people here who sort of invest along similar lines, and it's also a lot of fun, right? It's just all the social activities outside the conferences and the annual meeting. So I think it's that more than anything.
And how has Buffett and Munger shaped your investment career?
I guess like any sort of long-term quality-minded investor, you know, they've taught me the importance of patience and I think simplicity, keeping it simple, looking for a few sort of key drivers in a business. But yeah, there's too much to even, you know, there are so many things and concepts, and but I think they're probably some of the key ones for me.
And what question would you ask Buffett if you got the chance tomorrow at the AGM?
That's a very good question. I don't know. I think one of the difficulties is there's so many, all the questions have already been asked of him, right? And now I guess even the sort of succession there's clarity on that. So what would I ask him? Maybe why he hasn't, I mean, he's been a very US-centric investor. Maybe I'd ask him about why he hasn't sort of looked more overseas. Possibly, that's not a great question though, is it? So,
I think it's a good question. I mean, if you look at you can listen to all the episodes on Spotify, for example.
Yeah.
All the AGMs, and actually they discuss, for example, Sandvik when they did the acquisition of Iskar, and they found that Iskar was a better business and so on.
Okay.
So yeah.
I know he's done some international deals, but you know, there's already so much out there, right? And I've read the last 50 years of letters, but you know, I've watched all the AGMs, and so tricky to. I'll have to think hard about that one.
Okay, Christian, thank you so much for taking the time.
It's really tough to decide which question to ask if you got the chance, and it's something you can think about for forever, I think. But if you have some question, you should really take the chance. And for next year, you can also send in your questions to CNBC, probably, and they take up some questions as well. And we also met another investor, Rajeev Agrawal, that we didn't know before, but he was super friendly, and he decided to do a short interview about him and his relation to Buffett and Munger and his investment style. So here comes our conversation with Rajeev Agrawal.
Now I'm standing here with Rajeev Agrawal. Hello, Rajeev.
Hey, hello.
Thanks for taking the time.
Yeah.
How is it to be in Omaha?
Omaha is always wonderful. Actually, this year, the weather is cooperating a lot more. So, you know, we can do this interview outside. That's wonderful.
And tell me a bit about your investment style and what you're doing.
Yeah, so I am actually, dyed-in-the-wolf value investor. I focus on investing in Indian equities. I have a fund which is called DoorDarshi India Fund, and it is a US-based fund focusing on investing in Indian equities. And the goal here is to do well over the long term. So our focus is find good companies run by good management with a long runway at a good price. So we are asking a lot, but luckily in a market like India, which is having more volatility, we are able to find those opportunities from time to time. And so look forward to doing well as we have done in the past.
And how is investing in India, how does it differ to invest in the US or Europe?
Yeah, so what is interesting about India is that Indian markets are not necessarily very efficient. If you think about Indian equity markets, there are almost 5,000 companies listed. Of those 5,000 companies, around 2,500 trade on a daily basis. And of those 2,500, most investors only focus on the top 500. And that leaves another 501 to 2,500 that we can focus on and do very well. So as an active investor, we want to be investing in companies where there is inefficiency. And we think that because the equity culture in India has not been as prevalent, we can find those opportunities from time to time. The other thing is that Indian equity markets have a much higher insider ownership. So when you're buying companies in India, you are in the same shoes as that of the management. And the third reason is that Indian equity markets have a lot of impact because of the money coming in and out of the Indian equity market, right? And so suddenly the prices may go down because foreign investors are taking money out, like what is happening right now. And so it gives us more opportunities to invest in good companies at good prices. So those are some of the reasons why we like Indian equities.
And I mean, how is investing in India? I guess you mentioned the founder-led and a lot of insider ownership.
Yeah.
But how trustworthy are managers, and how much of your job is actually to figure out if managers are trustworthy and good capital allocators?
So I think that is a fundamental question. In India, I always say you have to first get comfortable with the management. if you do not get comfortable with the management, there is no business thesis. And so what we do is, and understanding a management is very hard, right? So the way we try to evaluate a management is based on the past track record, right? That is the only way we can judge. So we want to see what have they done and what have they said, right? How much value they have created. So in general, we are not buying the companies that are coming up for IPO recently because they don't have as much of a track record. We want to see good track record. And we also want to see good value creation. So you are looking at, are they actually going to share in the success of the business with the minority shareholders? But you're also looking at how are they allocating capital? Because in India, where there's so much of growth opportunity, unless you allocate your money well, you will not realize the full potential. And so the good news now in India is a lot of companies do conference calls, right? And you can ask them questions, right? And you can understand how they are answering. And also there are a lot of other interesting people who are asking the same questions. So you don't necessarily even have to ask questions. You just have to hear those con calls. And you can go back 5 years, 10 years. There is a lot of business press that has come around. So there's a lot of interviews on the television, right? There are podcasts coming around. Sometimes management may come on the podcast and talk about things. So we can actually form opinion from other people, right? There are various forums where we can go and understand how the management is. And I always think that anybody who is investing in India needs to first get comfortable with the management. And that is our primary job, but that is also, because it is so subjective, a very difficult job. And so we think there are a lot of good management. So I think there is a misinterpretation that Indian managers are not good. When you own a majority of the company, you want to do well for yourself. And so I think there is a lot of good opportunities, but you need to know why you are going in and not be driven by, somebody said this, let's do it. You need to do your own work. And because it is volatile, if you don't do your own work, you might be shaken out at the wrong time.
And considering we are here in Omaha, I need to ask, how has Buffett and Munger shaped your career?
So actually, Buffett and Munger got me interested in investing. I was very interested in investing before I went to the college. So I will give you a historical perspective. I went to IIT Bombay for my engineering. And in the first year, we had a big bull run in India. Okay, I was fresh out. I'm like, listen, I know it all. So I invested in those IPOs. And after a year, the certificate paper was not even worth the money that I invested. So I'm like, listen, this is not for me. I cannot do investing. And I pretty much was so disappointed with my approach that I said, listen, I can't do it. And then I came to US in 2000 and after a few years I started reading about Buffett and Munger. And when you read about Buffett and Munger and the approach, it's just so intuitive. Like as Buffett says, either it captures you immediately or it never captures you, right? And so for me, the whole value investing and buying things at a significant discount to what its value is just made intuitive sense. Yeah. So I am, just to give you a little bit more background about my genetic makeup. So I am Rajeev Agrawal, right? The last name Agrawal is actually a caste in India called Banya, okay? And these Banyas are always people who want to buy things at a significant discount. So, when I heard about value investing, it's like, okay, this is exactly what I should be doing. And so I have been reading more and more about Buffett and Munger, and the more I read, the more pull they had on me. And then over time, I was in the corporate world for a long time. And then I said, listen, when I am done with this corporate world, this is what I want to do full time. And luckily for me, I was able to get to that stage. And since then, I've been enjoying this journey and actually paying homage to Omaha and coming here and sharing and also learning from everybody around me. So it has been a wonderful journey. Yeah.
So if you could ask one question to Buffett in the AGM tomorrow, what would you ask?
So actually, I asked this question yesterday to one of the persons, and one of the big challenges in investment management, I always feel, is how do you find good investors, right? And as a fund manager, I want to ensure that I can deliver good returns. I can only deliver those good returns if I have investors who will come along with me for the ride, because the ride is going to be volatile. It is not going to be a smooth ride. Otherwise, everybody will come along. But the challenge with investing is that the ride is never a smooth ride, which is what creates the opportunity.
What we see today.
What we see today, exactly. And we see it in all markets, right? So because the ride is going to be volatile, is what also creates opportunities. But because it is volatile, you want to have investors who will stick with you. And you always get different perspectives about how to build your investor base so that they know what you are doing and they can stick with that. Now, Buffett is very smart. He has got a permanent capital, so he does not worry about it, right? And so I think the point is, how do we get to being where money can be pulled out anytime to having a permanent base of money, whether it is through a corporation like a Berkshire or through a fund structure, right? And having that journey and traversing that journey, I think, is a very interesting challenge. And if Buffett can tell us anything about how he has sort of traversed that journey and what are some of the pitfalls along the way, I think that will be very interesting to hear.
Thank you so much, Rajeev, for taking the time, and good luck with your future endeavors, and have a good time in Omaha.
Wonderful talking to you. Thank you, and I enjoy the interview.
Okay, thank you so much.
I think what stood out for me with the discussion with Rajeev is really it's interesting to hear what investing in other markets is all about. And I think Rajeev had some interesting perspectives about India, where, he focuses more on understanding the quality of the people than the business. And that's opposite to what Buffett thinks and has said in all years. And after that, the Berkshire weekend is full of different events, and we decided to go to an event arranged by Harris Copperman, which was about investing in cyclicals, which is maybe not neither mine or Eddie's circle of competence, but it's always interesting to hear what other investors' viewpoints are, and it got you thinking. What's your view, Eddie?
Yeah, I agree. It really comes down to circle of competence, and you always learn something new, and you can apply it in some way, but it's always the challenge with macroeconomics, because you can't leave it out entirely, but we are really centered and focusing on the businesses. Did you have some other thoughts about that?
Yeah, I think, for me, it's just about how many questions you need to answer in order to really understand those businesses. And part of it is, you need to have some perspective on forecasting not only oil prices, but the macro environment in general, and interest rates and demand in China, and I can go on and on. But another thing which is maybe more important is to understand that these investors are really experts in those areas, and they put a lot of effort into understanding them. And it just feels like you're in a quite big disadvantage going in there, because cyclicals can be go really quick to upwards, but it goes even quicker downwards. And if you miss those short-term trends, investing in cyclicals can be devastating, I think.
Yeah, we prefer some more predictability, right?
Yeah, and to be able to hold businesses for the long term and get maybe you won't outperform in the short term, but if you invest in great quality businesses and hold them for the long term, I think you will be okay anyway.
You probably sleep better at night, or I would at least. So after a nice dinner with some investors, we woke up early the next day.
Yeah, but not as early as we thought before. Our plan was to go up at 4 and to be at the stadium at 5. But we heard from other investors who have been in Omaha for the last couple of AGMs before, of course, the COVID, that as China is in lockdown, there are very few Chinese investors here. And apparently the last time there was around 20,000 Chinese investors here.
Yeah, that's 50% of all the attendance. So.
Exactly. So we decided to go a bit later. I think we was there around 6, so an hour before opening. And I think that was a great decision, because then we got some sleep. I think we're all a bit depraved from sleep after all those days.
Yeah, it's true. And it was nice. We also still had some time to get good seats and walk around in the convention center. What did we find there?
Yeah, the convention center is full of all the Berkshire businesses. So, of course, we went to See's Candies, and maybe the most important thing for us was to go to the bookworm to speak a bit with authors and look at all the books that Buffett and Munger has recommended.
Yeah, and 2 of them were The Oracle's Fables, a children's book with lessons from inspired by Warren Buffett, and also Getting There by Gillian Zigal.
Yeah, and we hope to get both of them on the show. I think to have a children's book describing the concepts of Buffett and Munger is really something I really, really like. And getting there, I think, is more of a description of different business leaders.
Yeah, and one of the books there was already sold out, but we got the chance to talk to him, and that comes a bit later in this episode. But did you have some highlights otherwise before the meeting started?
Not so much. I mean, it opened at 7, I think, and then the meeting started at 8:30, right?
Yep.
So I mean, there was just we were just sitting there waiting more or less, and after a while the video started. So at all the AGMs, they show a video that is prepared by Berkshire that you can't see if you're not in the stadium.
It's 45 minutes.
Yeah, 45 minutes, and most of it, I think, was like commercials of the Berkshire businesses. But I mean, Buffett and Munger showed their witty humor at times as well, so it was really fun.
And then at 9:15, Buffett and Munger came on the scene. How was that for you?
It was magic, I think. I mean, it was really surreal to see those heroes that you have read about, and I think I've put so many hours into listening to former AGMs, and it was just a really, really great moment.
Yeah, standing ovations from 30,000 people coming back after 2 years of lockdown.
Yeah, goosebumps.
And 6 hours of Q&A, approximately. Key takeaways.
Yeah, I mean, I think it's always it's almost a bit similar. I think the quality of the meeting depends a lot on the questions asked, and I think in general the questions were good. I think I mean, in the first half, because first half was almost 3 hours, I think, and then there was a pause, 1 hour. And in the first half, I think maybe Buffett spoke a bit too long when he answered, but I think, I mean, he's still really a clear thinker and so on. But
it's impressive how they can keep up the show for like being 91 years old and 98, but it was bigger difference than usual how much they spoke. I mean, Charlie doesn't speak that much at all. He mostly eats these peanut brittle bars that we have here in the temporary studio as well.
But when he speaks, it's fantastic. So it's
so that's why they didn't have time for as many questions. But the second question from the audience was from someone we just talked to the day before, Rajeev Agrawal. Did he actually ask the question that you talked about?
I mean, there were two surprises. I mean, first that, okay, wow, we know who the guy is. And the second thing is, but why didn't he ask the question I asked about yesterday? So it was a bit of a surprise. But I guess he did some thinking and came up with an even more important question, I think.
Yeah, it was on market timing. And he said that Buffett has been really good on timing the market. He mentioned like 60, 69 when he went out of the partnership, also in the coming decades. And he asked, aren't you really good at predicting the market? What did Buffett answer?
I mean, he more or less said that they are, I think, like price sensitive. So when there's a good price, they buy. And of course, that's often the same time when the market is down. But I think the general takeaway for me is more or less that it's not about making buy and sell decisions. It's about making buy decisions in good companies and hold them for the long term.
Yeah, I tried to write down a quote there in the middle of everything. And Buffett said that we've been reasonably good at knowing what we get for the money. And that was a good takeaway, I think, to conclude that. And some other insights from the meeting?
I mean, apart from the insights we got into Buffett's latest transactions, one of them was that they have increased their holding in Apple, which was quite interesting after decreasing it in the last year. And the other one was, I think, that they have bought a large stake in Activision Blizzard, which Microsoft is about to buy. I think apart from those kind of things, and also that they have decreased the rate of buybacks. But yeah, I think those kind of things is not maybe the main thing about the meeting. I think because you will hear about those anyway. I think it's about this. I mean, how they answer questions and how they always speak about like having patience and so on. But they had a section about tribalism, which I think was really interesting.
Why was that?
So, I mean, Buffett showed a few pictures that show that, I mean, if you have a different perspective on things, you see, like, he had a picture where you could see a duck or a rabbit, depending on your perspective. And I think that just shows how it's important to understand that people in this investing world have different perspectives on things. And some people will say that, no, I only see a rabbit, while the other one see a duck, and you will never agree. And that's fine. I mean, you can have different perspective on things, and that's just fine. What's your view on that section?
Yeah, they showed 2 pictures. It was another one as well. And the thing that Warren was saying was that he read one sentence when he was 19 or 20. He couldn't remember. But from the book that he loves. And that changed his life. And he says it can really be, suddenly you see it.
Yeah, and one part of it is, I think, related to politics in a way. If you're like a Republican or a Democrat, if you're a Republican, you will continue to see things like just hammering in the view you have without seeing the other person's perspective. And I just think it's important because, I mean, if you try to, you can see both sides. You can see the duck and the rabbit, and I think that helps because what Buffett spoke about, what he's a bit scared of, is that tribalism is increasing a lot in the world, and that causes a lot of social problems. And I think that's the impact that will have is, of course, a worse economic landscape and a worse landscape for humans. And I think it was interesting that he took that up.
Yeah. Some other notes from me is on volatility, for example, that they spoke about that stocks have become the poker chips, and they mentioned this buying of 14% of Occidental Petroleum, and they did it in 2 weeks. And this is a company that has been around for decades. And I connected this with Dennis Schonchak that we had in episode 10, and his lesson from meeting Buffett when he was a student at Harvard. And what Buffett said to him was that you buy quality and then you never resell the stock back to these short-term players. And if you do that, you will be successful.
Yeah, I think in that example also it was interesting because the free float, I think, was only 60%. So
exactly.
He bought like a fourth of that.
Yeah, it's insane. And Munger said that there's a mania of speculation and this casino behavior. So it's really interesting to see where we're going. And Buffett just replied that we are sane. And that was his conclusion. And they depend on this mispriced security. So it's really good for them. And we also saw that with the buybacks that they have been doing this first quarter. And they also announced that they have not been doing any buybacks in April. So that was interesting. They really pushed the button.
Exactly. And I think as in previous meetings, and maybe this was even more evident in this meeting, is they're hammering down on Bitcoin. That was quite a fun segment. I think many investors in that group, I mean, in the AGM, probably agree. But I also think that quite a few investors in that room disagree on Bitcoin. Yeah. So I think it's clear that Buffett and Munger have their perspective, and I think, as I said, it's shared by most, but not all.
Yeah, and I think Buffett gave a really good answer. He really took the time to explain the question, and he compared it with productive assets. If you could buy 1% of the farmland in the US, for example, he would every day prefer to do that and spend 25 billion for that. And if someone would offer him all the Bitcoins in the world, and he would not take it for $25, he said. So and Munger is always ranting a bit more, but
yeah, I don't remember if he said rat poison this time, but something.
No, he didn't actually.
in that sense,
something like that. Yeah. Then they got a couple of questions on inflation, and Buffett mentioned his article that inflation swindles the equity investor that he wrote, and he really wanted to tell the story behind it, and I really got the impression that he had a lot of things in his mind that he wanted just tell the audience now when he had everyone's attention. But that was not. I mean, the only thing I took away from the inflation discussion was that then he, like in that article, he spoke about inflation for equity investors, and now he was just clarifying that okay, inflation swindles almost everybody.
Yeah, it doesn't depend. I mean, of course, it's better in some asset classes, but I mean, I just think he wanted to make clear that don't go out and buy bonds just because there is inflation. Bonds will be hurt as well. So I think that was maybe the main thing he wanted to clarify.
And after the meeting, did we end the day, or what happened then?
So I mean, I just have one comment before that, and that was, I mean, we have this situation in Russia and Ukraine, and there was quite a long discussion about weapons of mass destruction, and it was just interesting to hear their view on that. That it's more or less you can't protect. You can't protect. I mean, what's interesting is if these kind of things happens, it doesn't matter if you're rich or poor. It impacts everybody as much. I think if some leaders would do a stupid, irrational decision in our view, then it hurts all of us, and then money is maybe not the most important thing.
No, they said there will be no regulator, so nothing matters.
Yeah. To come back to your question, I mean, we had prepared to go to a few events after the meeting. Of course, we were quite tired. We went up early, but I felt the adrenaline was just kept you going the whole day, so it was really nice. And we went over to the Hilton Hotel, which was just past the road. And me and Mark, who was also with us in Omaha, we went to the...
Who is Mark?
Mark is one of our equity analysts. And it was really fun to have him with us because he's a real Buffett and Munger nerd as us. And we had a great time. And we actually went to a meetup with the leaders of Trupanion, which is a pet insurance company, which has been, the CEO, Daryl Rawlings, has been a big Buffett fan. So that's why he gathered a group in Omaha during this weekend.
And did you get some takeaways from that meeting?
The takeaway is more or less that, first of all, I think the investors who were in that room were really, really knowledgeable about the company. So it was great to hear their questions. And what was clear was that, I mean, I think the leaders in Trupanion's team was great in answering the questions. And what stood out, I mean, Daryl Rawlings started the meeting with the only thing he really disagrees with Buffett on in the Berkshire meeting is that he doesn't give enough room for the leaders within Berkshire. And Rawlings had 3 of his leaders there who was able to present themselves, and I think they also got a lot of space in answering all the questions. And he didn't really, I mean, he clarified some things, but I think he showed that they have a quite decentralized structure, and I think that was a really good point of his.
Interesting. And me and Gustav, our sound engineer, we didn't go back to the house and rest. We went to Valley After Hours meetup, also on Hilton, and we met an interesting person there, a real Buffett and Munger and Berkshire Hathaway expert, Adam Mead. And here comes our conversation with him. We are at Hilton here in Omaha, on the other side of the road from the big CIH Health Center, where Berkshire Hathaway annual shareholder meeting is just finished, and we're here with Adam Mead.
Wonderful to be here.
And so what are your background, just shortly, for our listeners?
Yeah, so I manage separate accounts for clients, and then I have a monthly investing newsletter, watchlistinvesting.com, and just try to integrate timeless investing concepts with just modern day value investing as inspired by Buffett and Munger.
Yeah, and you're also author of a book, and we might talk more about that in another episode, but you were here selling it. Can you introduce briefly about the book?
Yeah, so it's the complete financial history of Berkshire Hathaway. It walks through Berkshire's history A to Z, right from the early textile days all the way up to the modern day, and really just looks at all the acquisitions, capital allocation decisions, and all that timeless wisdom that we've all come to love from Berkshire.
And it sold out pretty quickly here at Bookworm in the convention center, right?
It did. I mean, I couldn't be happier with how it turned out, and it was so great just meeting all these fans that just kind of came out to Omaha, but then came by and stopped in and said hello and signed the copies, and yeah, they flew off the shelf in 5 hours. It was a crazy time, but it was wonderful.
Amazing, and it's really an honor, I guess, to be featured by the Oracle himself.
You know what? So I came out here 10 years ago. This year, 2012 was my first meeting, and I was lined up at 5:30. I did the whole run to the floor thing, and it's almost surreal for me to now be in the shoes of an expert on Berkshire. I kind of have, it's like, well, I'm an expert on Berkshire, but I lived 5 years of writing this book, every little detail that you can imagine, and it's amazing to be able to be here and be selected by Warren to have my book featured at the meeting.
And if you would name one or two concepts or principles that really have shaped you and that keep coming back to your mind in your daily life as an investor and as a person from everything that you have learned from Berkshire, what would that be?
I think thinking long term, taking the high, Buffett and Munger, they talk about that in the context of business, but I think those from the outside that don't fully appreciate Berkshire don't realize that it applies to your whole life, and I think that's probably the biggest takeaway. But what Buffett is the master of is keeping things simple. He has the depth, obviously, to back it up, but it often, we heard today many times, it's simple. Keep it simple in many different contexts. And I think if we take a step back and just sort of remember any business that we're looking at or investing in, whether it's Berkshire or another company, just remember what they're doing, that basic economic principles that they're basically trying to achieve with their system, which is a company, and the finance and the accounting is kind of built around that. But if you can get that nexus of the economics, everything kind of falls into place.
And for our listeners who are not here, how was the experience today? What can you say?
Yeah, I mean, so this is my 9th year out here in person. Would have been my 11th, but we had the 2 years off. Every time I come out here, it's like re-energized. I mean, we were chatting earlier, and I mean, it's just a wonderful 3-4 days, depending on when you come out here. You just meet wonderful people. Everybody is so friendly. You learn some new things. You meet some new friends. But it's sort of this annual recalibration of, what we're all about. Just kind of, just getting back again to those fundamentals that we love and admire about the Berkshire culture.
And was there a puzzle that, like a piece in the puzzle that you found during this meeting or during the weekend so far that you think will stay with you?
Gosh, I love when Warren, he repeats a lot of the same things in different ways over the years, and so there were some things that he reiterated this year that just kind of stuck. But I like that he took the time to highlight. Almost everything he does now is with an aim to teach. He loves teaching. Just like you guys do with your show, and so. Specifically highlighting the Goldman Sachs fee with the Allegheny deal and bringing that to the forefront and saying, this is why I did this. This is why, you should pay attention to it. It's a fee that's sort of in the background, but, someone has to pay it. And so, that specifically, but I guess kind of more generally, just, again, keeping it simple. He studied the company for 60 years, he said, and then it just clicked. One day because of an email from Joe Brandon, and $11.6 billion later, and Berkshire has a new subsidiary coming in the fourth quarter.
It's amazing. Was there any surprise for you here?
I don't think so. Not really any big surprises, and there usually isn't.
Maybe the Activision Blizzard, or did you?
Yeah, that's something that Buffett, you kind of forget just how tuned he is into like the pulse of the market. You kind of have this image of him, 5 miles up the road on Farnham Street, sitting in his office just reading annual reports, but he can't help himself look for, in this case, risk arbitrage, which is just a differential between the announced price of Activision and what it was trading at. And actually, that reminds me of the Occidental Petroleum. He put up a slide of just saying, this. I mean, for Buffett to say this was incredible, or I forget the adjectives he used. That makes me sit up in my seat and just say, okay, let's pay attention. But for Berkshire to buy 14% of Occidental in the span of a couple of weeks is just incredible.
Yeah, and it really speaks for the market volatility in the recent, and they were criticizing quite a lot this the mania and the casino behavior.
Yeah, and I think you've seen this year by year, and with my book, I went, read every single thing I could find on the Berkshire meetings, and watched all the meetings that were there from 1994 on, and you kind of see these themes. We saw it in the tech boom in the late 90s up to the 2000s. And you kind of see it. Actually, you saw it again in 2006, with real estate, and they were kind of talking about Fannie Mae and Freddie Mac, and then now, of course, Bitcoin and crypto being sort of the latest hot thing, and they opine on it. They know. I mean, they know what's going to happen, and I think they do their best again to educate, but it can only go so far. I mean, everyone here. Basically, I would feel safe to say 99% of people that are here would agree with them on crypto, and the other side is going to disagree with them. So they're not really going to change any minds, but it's something that's on the minds of people that are out here.
All right, and what are your plans now for the rest of the weekend and for the coming months, waiting for the next meeting in 2023, hopefully?
Yeah, no, I fully expect to be back here next year. It's after the meeting. There's a lot to talk about. That is the nexus of the whole weekend, and I'm going to the Markel Brunch tomorrow morning. That's a wonderful event, and to come out here and you come to these events, and last night I was at the Columbia Business School dinner, and Mario Gabelli pays for that. Markel puts on their brunch for free, and just the generosity, not only in wisdom and knowledge, but serving us food, and even in the convention center this morning, you can just grab free coffees, and I think that just really sort of highlights the partner culture. I really truly believe Warren thinks like that. If it was like 10 of his original partners and his sister coming over for his sort of annual debrief, he would probably serve them something to eat, and that extends to the 30 or 40,000 people that are out here today.
Yeah, very nice event, and we will see you at the Markel Brunch tomorrow then.
Yes.
Thank you so much for taking the time here.
Great to be here. Thank you.
I really liked speaking to Adam Mead. He was such a friendly person, and I really look forward to having him on the podcast and talk more about the book. He has so much knowledge. The book is more than 800 pages, and what did you think?
Yeah, I've heard it's a large book, a lot of details, and I look forward to reading it because I haven't done that. And I think it was great to hear his experience, having been to 9 AGMs before, and
And after the talk with him, the day continued.
Yeah, and we met up. I mean, me and Mark were at the Trupanion event, and you stayed at the Value After Hours event, and then we gathered at the Marriott Hotel to go to Willow Oak Asset Management's panel debate between Stephen Keel, Keith Smith, Jeff Gannon, and Shree again, our friend. And it was the moderator was Andrew Kuhn, and Andrew and Jeff Gannon have Focused Compounding podcast, which is a great podcast, and I think Andrew did an amazing job moderating the event. What were your biggest takeaway from this?
I really liked the story that Jeff Gannon told about one company that he was researching. It was a bank, and he wanted to see the headquarters before he could invest in the company. And he went out there. He saw the customer area. It was really nice, and then he also got to see where the employees work, and it was very modest, and that gave him the confidence that okay, they are prioritizing in the right way. They are frugal in the right way. But I had a follow-up question to him because he also said that the employees are cramped up in there, and that got me a bit thinking about how do you treat your employees and how do you treat your customers, and I think that's an interesting question. So we drilled a bit deeper into that in the panel discussion, and what he said was that he's really focused on the value guy and the price of the company, and he said that the employees are satisfied enough and they are competent enough to do their work, and that was enough for him to do an investment.
I think one takeaway I had was that I think it was a great event, but I think one issue with these types of panels are that the investors have so different perspectives. I keep coming back to Morgan Housel's concepts about that each individual have different risk profiles, and we think really different about risks, and going on in that direction. It's also about we all have different styles with our investments, and I think these four panelists have really four different ways of thinking about investments, and when they discuss the subjects, they come from a different angle. And I think maybe sometimes when these discussions happens, they're too far, too far between each other, and that makes it a bit, maybe not the best discussions. But it was really interesting to hear each one's perspectives. And I mean, Shree, as we have discussed before, he's a real long-term thinker, focusing on quality companies, and I think it was really interesting to hear what he had to say again. But Jeff Gannon is one that I've followed since he had a blog for a very long time ago called Gannon and Hung Investments, I think it was, and that was one of the first bloggers I started to read when I was a emerging investor.
When was that?
I think it was around 2010 or something. It was just clear how much of a first principle type of thinker Jeff is. He won't listen to other investors. Maybe he speaks with others, communicates about things, but he does his own research, and that was really clear. And I really liked his viewpoints.
Yeah, and another takeaway for me, also from Jeff, was when he got a question on compensation, and he had two principles that he has found works. He said he doesn't know why they work, but they seem to do it. And the first one was that when you have a CEO that has done it successfully one time in the industry and then finds a new idea and emerges on a new journey, that has been very good hunting grounds, those type of businesses. And that's something we also have in our radar rating. That is one of the questions. We want the CEO to have done it successfully before, and it comes down to track record. And the second one was even more interesting, I think, because it tied very, very well into the compensation, and that was related to payment. And when the CEO is not the highest paid, there is someone else in the organization that has a higher salary. That seems to be a very good indicator about the culture in the business, and that this can be a very prosperous company. So I take that one with me.
And again, what's the best example of that? Berkshire Hathaway. Buffett, I think he pays himself $100,000 a year.
Yeah.
And many of his managers make millions, of course.
Yeah.
So and after the Willow Oak event, we went to a house party gathering, which we got the invite from Jeff Graham, which we interviewed in the podcast before.
Episode 6.
Yeah, and it was full of, again, in Omaha this weekend, there are only really interesting people and like-minded investors, and I think we had a few really interesting discussions, and we also met a few guys from Sweden, which we rate really highly, and we know that they listen to this podcast.
Yeah, it was really fun to, again, meet people in person. And we spoke to Jeff before, and we spoke then about shareholder activism and his book, Dear Chairman. So if you haven't picked up it or heard the episode, we can really recommend it. Then we started this day, Sunday,
the last day in Omaha. Yeah, we leave after the weekend. So yeah, this is a Sunday, and as typical in Omaha this weekend, Markel has a brunch, and it's of course then the CEO Tom Gaynor is there and his management team.
Can you introduce Markel Corporation a little bit?
Yeah, so Markel Corporation is by many seen as sort of a mini Berkshire. So they have like a specialty insurance arm, which is maybe the core of Markel. And they also have Markel Ventures, where they do private. They invest in private companies and buy the whole piece. And lastly, they have the investments arm, which is, all insurance companies, of course, have an investment arm. But what's different with companies such as Berkshire and Markel is that they invest a large chunk of that in equities to gain a higher return. And Markel has a really good track record. They have beaten the S&P for many decades. And the style is quite different from Berkshire in that they are more diversified. And they do like a dollar cost averaging style. So they invest like when they get money from their insurance side, the float, they invest that into equities, and typically they increase their holdings a bit. It's been really successful. They focus on high quality companies, and it's worked for them.
Mm. And there were 2 hours of Q&A, or even a little bit more. Some interesting questions.
Yeah, there was a long Q&A session, and I think it was good. It was a mix again about like Markel's typical, what investments they have done recently and companies they have bought and sold. And I think the main takeaway again is not that. It's the same as with Berkshire. I think the main takeaway is the principles that Markel has, that they are really long-term thinkers, and they do this for the long term. They think about the next 10 to 20 years, not the next quarter and year. So I think that was maybe the main thing for me, and that's been the main thing for me during the whole weekend. That we got that from all the interviews we did. It's about having patience and thinking for the long term.
Yeah, and there were a very interesting mix of shareholders asking the questions, and a lot of students in their early 20s, and seems to be a big interest for these kind of businesses as well. So it's promising for the future, I think.
Great to see all the young people here, I agree.
Yeah, and great questions. So if you would rate all the events we have visited, 1, 2, 3?
I have to say, to hear Buffett and Munger is the key. It doesn't matter that they are not as sharp as they were maybe 30 years ago. They are still super sharp, and I think it was magic to see them. And I think the whole event was really, really, really a nice event.
Yeah, it's number 1 for me as well. And then I think actually Markel would be the second one. It was really nice to hear Tom Gaynor in person, and a lot of good, interesting insights. So I would definitely recommend everyone to visit that one and stay for the Sunday. And Willow Oaks was also highlight for me.
Yeah, I would put them in the same order. All of them were really good. And it's not only about listening to the panelists and being at the event. You meet a lot of people, and we had some great discussions before meetings and after meetings and so on. Some of them we had arranged before. We're having this serial acquirer event on the 18th of May, and we have just seen how many international investors that are interested in Swedish serial acquirers. So I think that was like a fun thing that we haven't really thought about before, maybe.
That's true. Confirms that. And also fascinating, of course, to shake hand with Morgan Housel and these big names.
Yeah, and we saw, Chuck Aker was at the Markel event, and he's one of the best investors I know of. So it was just to see those kind of people is really nice.
Yeah, and what's up now?
Yeah, so now, we go back to Sweden in a while, and we take with us all the great discussions we have, all the meetings we have with authors and investors and so on. And I think for me, I think I will like it. I feel refreshed. I feel refreshed in the mind. I feel like I prolonged my thinking with at least 5 years after this. So I hope I will be able to keep that for the next year.
But will you wait 5 years to come back, or?
I don't know. We will see. I'm not sure I will go back next year, but maybe.
Yeah, I would like to.
Yeah,
I
would like to too. It depends on, situation and so on.
Yeah, of course. So that concludes this special episode from Omaha, and we are now looking forward to our next episode with Avner Mandelmann in 2 weeks, and we will then speak about his book, The Sleuth Investor, a very interesting approach to investing, very hands-on, doing the hard work, channel checks, highly recommended. Stay tuned for that episode. See you. Thank you for listening to Investing by the Books, a podcast by Redeye. Follow us on Twitter at ib_Redeye and email us at ib.podcast@redeye.se. To improve, we'd love to hear your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. I'm your host, Eddie Palmian, and until next time, I sincerely wish you the best of luck on your journey through life and investing.